So I think what you heard Janet Yellen say is pretty consistent with what Jay Powell has also been trying to position the Fed for, which is essentially to put the Fed and the economy on an even keel right now, a place where it can move either way. So you can imagine, I would say, a balance of probabilities being almost 50-50 in terms of either a rate hike or a rate cut.
You know, when I was listening to Janet Yellen speak, she has come so far. I mean, Fred, do you remember, she also had a communication slip up early in her time. I think it was one of her first news conferences. Powell's been criticized a little bit for miscommunicating and having to backtrack. I mean, how challenging is it in this day and age to communicate to the markets your policy? Forget having to make your policy.
So it actually is quite a challenge. It's something that can be really inordinately difficult. And if you keep in mind, too, that the chair of the Fed is also the chair of the FOMC, the Federal Open Market Committee, and that committee contains a lot of different voices, a lot of different perspectives. And so the chair is also attempting to communicate the views of everybody on that committee.
Rick, what do you think?
So I think that we're in a situation where the Fed basically has to worry about where the data is going to evolve. And I think that that it's true that the Fed's talked about pausing, but it could very much go the other way. Part of the problem for the Fed right now is there's tremendous uncertainty, particularly in terms of government policies. The trade war issue is still a very hot one. That could go very sour. There's this issue of the government shutdown. It could happen again. My view is that if those things resolve in a positive direction, then the Fed actually is going to have to think about actually going back to raising rates. And that there still is an issue that this is a very high-pressure economy, that if unemployment rate stays very low, that's going to present some issues for the Fed. But it also could go in the other direction. And one of the things I think that Janet said that's extremely important to understand is that the Fed should operate very quickly if information changes. And a classic example of this occurred when we actually had the beginning of the global financial crisis, which started in August of 2007. At that time, the economy was booming, inflation was going up. All of a sudden, there was this shock, and basically, which was in August of 2007. What did the Fed do? It actually started cutting rates in September. So the Fed needs to be very nimble, and it depends a lot on the data. But I think that people should not think that just because the Fed is a little more uncertain right now, that this means that, in fact, that they shouldn't raise rates, particularly if, in fact, inflationary pressures actually start to rise. And that could very well happen. So I think that what's welcome here is that the Fed's basically saying that it's data dependent. And I think that there has been a change of views in the last FOMC cycle, that in fact the Fed is a little bit more concerned about weakness in the global economy and the craziness that we see happening in politics, not just in the US, but in the rest of the world. So which way it's going to go is not clear, but the Fed should be nimble. It should be very willing to move very rapidly in a different direction if that's what's called for. And I think that the Fed has done that in the past, and it was very important in terms of policies being successful.